go. Well, hello everyone. Welcome to a fresh new week in the markets and welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach with Schwab. Delighted that you guys are joining me this morning. Or this afternoon, it's noon Eastern. So what are we going to talk about today? Well, we're going to look at some of our current positions. We have a little trade management to do. There was some conversation happening pre-show in the chat about how to handle short verticals when something is in between the strikes. And we have that situation happening with a couple of our iron condors. So we're going to talk about that today. And then we've got some new trades to place, both on the bullish side of the street and on the bearish side of the street. So, you know, we got a little something for everybody. This is an active trading class, an intermediate level class. And so we move pretty quickly and we tend to cover a lot. But the great news is that this is recorded and will be available in the archives. So you can always go back. And if there's something where I move quickly and you didn't quite see the mechanics of placing a trade, you can always make a note that was at about the 17-minute mark and go back and watch that in the archives. Now, just before we get into the thick of things, I just want to, invite you to follow us on X if you aren't doing so already. We have the fantastic Mr. Kevin Horner, a fellow coach and friend who is in the chat with us today. He understands all these strategies backwards and forwards. So if you've got questions between Kevin and I, hopefully we have answers for you. And you know, we're posting on X on the daily, so you're missing out if you aren't following us there at Barb Armstrong CS and at Kevin Horner CS. I have also now launched into the world of, or relaunched into the world of LinkedIn, and so you can find me there as well. Just keep in mind that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn and hone your skills. But one of the differences is that short positions will never be assigned early in Paper Money. That can happen in a live account. Okay. So, you know, on Mondays, Kevin 4 days a week does a class called Trader Talks, a webcast at the market open, and he provides a fantastic market overview. So if you are not following that webcast, you may want to do that. So my market overview has become very teeny tiny. We'll do a bit of trade management and then we'll spend the rest of the time on placing some new example trades. And we're kind of tiptoeing through this land of uncertainty where we never know what's going to happen. We don't know how the market's going to react. You know, this issue with the Strait of Hormuz is ongoing. Oil is up over $100 a barrel, and we're not seeing anything that seems to indicate that that's going to come down. So there's lots going on to make a trader tentative, and how do we deal with that tentativeness? And you know, we're going to explore that a little bit. This class, we started out at the beginning of January with 25,000. Our max position size, if we're taking a stock position, is $5,000. And you may say, like, back the truck up, like that's 20%. You know, if you had $1 million account, you may not want to put 200,000 into one position, but you know, we're taking a bigger percentage position here because of the size of the account, and we wanted to be able to do things like buy right, covered calls and that kind of thing. But that isn't saying that this percentage would be an appropriate position if you had a much larger account. That's a personal decision you have to make. And then our max risk per trade, we're going with $500. And our focus is on the shorter to more intermediate term. We're not doing a lot of buy and long-term hold in this class. And we're trading both bullishly and bearishly. And, you know, I like to say with options, it's like you have this, you have a tool bag and it's got all these incredible tools in it. You just want to be careful, you know, that you really understand how to use those tools, you know, before you start, you know, gearing them up. You know, but, you know, we look at owning stock, we look at long calls, at short puts on the bullish side of the street, buy right covered calls, long call verticals, and short put verticals. These are the main tools that we use when we have bullish opportunities. But on the bearish side of the street, and some of us may be a little rusty because we haven't called these tools out as much until lately, but long puts, long put verticals, short call verticals. And then when things are going sideways, some iron condors, we're going to look at 2 iron condors today. We also did a long put and a couple of long put verticals in our class Friday. So if you missed the Friday class, you can always go back and rewatch that. Okay, let's get over to Thinkorswim. And just to look really quickly, the S&P, I mean, it's been on the struggle bus, and not just like for the last week. It kind of got on that train at the end of January and hasn't really gotten back off yet. Friday at the end of the day, it was down 9% from its high, still down like 8.5. So, it's not like Chicken Little is in having a nap. She's still out running around the yard, and she's got some of her friends. I think they're doing relays. So, and the NDX went into correction territory at the end of last week, 5 down weeks in a row. And, like I am an annoyingly optimistic person, even with today's, bounce, we're still down 11%. So, the NASDAQ in correction territory, and we can bring up the Dow. Where we have this candle pattern indicating that this downtrend, we may be setting up for a bit of a rally, but it could just be setting up another bear flag. Not to rain on the bulls parade, but you got to call it like you see it. And the Russell, it's not looking so hot either. Variations on a theme, but the net is down, 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 the whole lot of them. And then when we look at the VIX, even though when I looked at it first thing this morning, it had pulled back a little, we're still at 30. Like, holy smokes, Batman. Like, if we look at the last 2 years, how often have we been this high? Once, twice, well, one day here where it closed below, like three or four times. Like, we are in the nosebleeds here. Yeah, so this is not really encouraging, right? And then if we come over here to our watch list, and we look at, and this is a public watch list, so our sector indices, and we look at like which sectors have been strongest over the last 3 months. Energy, like so far ahead of the pack, it would make your head spin. Oh, this is a 2-year chart. Let's get in a little more. Like, since what? Since the beginning of the year, it's just been marching straight up the hill, hitting an all-time high. Utilities now in second place, and then materials picking up third. And then in the last, and who's at the bottom? Technology, continuing to fall today. Consumer discretionary, right behind it. And financials also on the struggle bus. Kind of these are the ones that are having the heaviest influence. And when we come and we look at our Market Watch tab, and again, I'm not going to spend a lot of time on this, but like here's our tech sector. It is the heaviest hitter. So, when tech is down, it's pretty hard. Like, even if some other sectors are really strong, like here's energy, which has been really strong, but in comparison, I don't want to say it doesn't matter at all, but it has nowhere near the influence. Let me just move this over here. It's pink. So, oops. Okay, let's see if I can get this to work. Oh, I got something going on with my drawing tools. Oh, now this is repeating. Okay, I'm going to abandon ship on that. Okay, Yes, and somebody is typing into the chat, the Mag 7 has a lot of weight. Yes, it sure does. Oh, that's all watch lists. So here we go. So, you know, here's tech, and then here's energy. Pretty small potatoes and by comparison, right? Big hitter, little hitter. Okay, so I mentioned on Friday that we had 7 positions that had hit targets or exits. And I'm not going to go over them in class, but I will record a mini session. It's the first time I've done one like this in a while, but we had Lennar. Let me just get my list. We did a long put vertical on Lennar, and we had a 25% profit target on that. That hit our target. Meta, we did a long put vertical. That hit our target. We had a long call vertical on KMI. We closed out the final leg of a NVIDIA Iron Condor that hit a target. CrowdStrike long put vertical that hit a target. And so these we were all out for a profit. And then MCHP, we did a long put and we were out of that one for a 58% loss. And Micron, we got out, we did a long call vertical. And if you've looked at the Micron chart lately, yeah, that didn't work out so well. But I will record a mini session on that. It will be posted, and it'll probably be tomorrow before we see that posted, but it will be posted in the trade management mini session section, and it will have a tangerine colored thing. I'll post it on X as well, and then it'll be posted at the top of this section. Okay, so that's where you'll find that if you want the details, because someone was asking about what happened with the Lennar trade. So you'll see that here, and look for that maybe starting tomorrow. It'll be recorded later this afternoon. Okay, so current position, somebody said, could we look at the AVGO Iron Condor? And that was the next thing on my list. So the answer to that is yes. And so here's our Iron Condor on AVGO. Now let's look at this on the chart, because you know, if you're anything like me, very visual. So we did an Iron Condor on this day, and the expectation was this had been trading in this range between 305 and 355 since, you know, the middle of December. And the expectation was that it would continue to do that. Well, it didn't. It came down here and bounced. And what we did is we bought back, we closed out the short call vertical side and had just the short put vertical side. And then we mentioned it Friday, it was kind of flirting with it. And we said, well, let's see if it comes back. But today it's continuing to fall and hitting a 6-month low. And so if we look at this and you say, well, you know, we position size, we can afford to take a full loss. It doesn't mean we want to do that, you know, and even though it's 305 and 300, it's through both strikes. So it's trading below both strikes. And yet we are still, and you know what, we were $70 up on this trade first thing this morning. So like we're down another $100 on this. Like I should have just closed it out first thing, but you know, we're still $210 away from max loss. Well, sorry, that would be 4, 5. Yeah, we're still $200 away, $205 away from max loss. And you know, our total loss isn't really 350, because if we come and we look at this, we were paid 235 for this, and then we exited part of the trade for 22, yeah, the call side. We paid 22 cents to close that out. And so if we come here and we say, well, you know, we were up by 213. Now we're paying 295. If we pay 295 to close it out, we've lost a little bit, but it's like under $100. And we'd rather do that than continue to lose more. And it looks like we have this break of support. Okay, so what we're going to do is come up to our working orders, we're going to come to AVGO, and we're going to cancel and replace that order. Now it's saying 303. So we'll pay that 303, and we're going to close that out. Okay. Now, we had one other iron condor in play, and that was United Healthcare. And so with United Healthcare, we still have both sides of the trade on. We're underwater to the tune of $30. And we're down by $34 on this one. So let's go have a look at UNH. So with UNH, we now have this candlestick. And if you're new to technical analysis, you may want to check out Getting Started with Technical Analysis. That is indicating, one, this is a hammer at this support level. And, support isn't a finite number, it's a range, but it's also an inside day or Harami pattern, which is saying that this may have found support. Now, it could go down again tomorrow, but this candle pattern indicates that it may go up. But what we might want to do here is take the short call side and exit that side of the position. And so if we look at this, it was 665 minus 510. So we made $1.50 on this side, like we were paid $1.55 when we entered that side. And now if we close it out, it would be 113 minus 76, 37. So if I take 37 divided by 155, we've got about 77% of our max gain on the call side. So what we're going to do is come up, and we're going to come to UNH. We're just going to cancel this order altogether. And then we're going to come down and say, we still have 11 days before this is out, but we're going to highlight this and create a closing order. And what we want to do is buy back that call vertical for that 35 cents and close out that side of the trade. Okay, is this making sense? Yeah. And then when that fills, we can go back in and say, and then when we've got 80% of our max gain on the short put vertical side, then we'll close that side out as well. And we understand that that could take a few days. Okay, now there's one other trade I wanted to review, and then we'll spend the rest of our time on new trades. So we had put 2 trades on target, and this was a bullish trade. And so on target, we did a long call vertical, and on some of our verticals lately, we've been saying instead of going for 50%, we're just going to go for 25. So we're up 26.9%. And the reason that we are having this conversation is because when I looked at Target today, we had a candle that looked similar to the one on UNH. If this were happening at a support level, we might call that an inverted hammer. When it happens at a resistance level, we would call that a shooting star. Okay. So this is saying, hey, this little uptrend that we've been enjoying for the last 1, 2, 3, 4, 5 trading days, it might be over for a few days. Now, our short put vertical here, we have 11 days, so we have time for it to maybe pull back and rally. But in this market, if we have a bird in the hand, and we have a bird in each of our hands because we did a long call vertical and a short put vertical, maybe we just take the money and run. And we say, you know what? I've got a decent profit here. Like, how many people, if you went to a barbecue tomorrow night and you said, can you believe this crazy person suggested that I exit a trade that I put on, how long ago was that? I put it on the 16th of March. I put it on 2 weeks ago. And I only have a 36% return, and she's suggesting I take it. Like, they'd ask if you were committing a felony. That's not too shabby. And so we are going to take the money and run on this. Okay. So, and let me just make sure that we don't have an exit order because we should. Okay. So here's our long call vertical. So we're going to take that. Okay. So we decided to take the money and run. And I want, and you know, mad respect for anybody who says, no, I have faith that, you know, I could get a better return on that. And so, you know, I'm going to hang out for it. And then the other one is the short put vertical. And so my thinking, and this is how some traders might do this, is to say, well, rather than, you know, anticipate that it might come down and kiss 115 and then bounce again, maybe I take this little profit, this 36% return, and I don't have a trade on here. So maybe I take this return and I say, you know what, I'm going to take the money, ring the bell, put this in my realized gain. And then if and when it does come back down, if it comes back down and kisses that 115 and bounces, then I could put a new trade on. So we're going to buy this one back. Now, you know, if we were in, you know, La La Land, like we were for a part of last year, you know, where things were just like going up the hill and, you know, things were pretty bullish all around and there was less uncertainty, might we have made a different decision? We might have. But, you know, like someone just typed Riceberg, thank you for that. Like in uncertain times, you know, you just, you know, play things a little differently. You know, take the money, ring the bell. All right. And so one of the things, because somebody had asked about a short put vertical and they said, you know, should I roll it? One, I think if you wouldn't place that trade exactly as it is today, don't kick a losing trade down the road. But, you know, if you look at exiting, even if it's 10 days away, chances are you aren't at your max loss like we weren't with UNH. You know, so you have to ask yourself those questions. The other thing is, if you're looking at a trade and with UNH, we're looking at it and saying, this could bounce, so maybe we stay in. And then we look at AVGO, and I mean, these are live candles. They could trade by the end of the day and say, this looks like a more significant break of that support level. You know, so, and this is where we put our strike, but really the support level was above that. The support level, I would say, was more like here. So, you know, this looks like a continuation. And could it come back around? It could, but we're just trying to make the best decision we have with the information we have at the time. Okay, getting off my pedestal on that one. Okay, so let's now go to the bullish side of the street. Let's look at Southern. So Southern, and how did, you know, I get asked a lot, how did you pick this? Well, we're kind of late to the party here because, you know, we had this bullish entry really on this day here on March 23rd. And then, you know, we had a confirmation that it was moving up here on these 2 days, and it's continued to move up. But, you know, we are where we are now. So, you know, when I looked at this a little earlier, it was right just hitting 97. But could we do this and say, hey, this previous high here was, you know, was around 99-ish. I don't know why this isn't clicking in. Let me just go to my open, high, low, close. That's where I want it to, I want my drawings to snap to. So around that kind of 99.50-ish level, our high on that day was 99.58. So could we put in a target of 99.50? And, we could do this with an option, but it's already kind of had a bit of a run up. It's crossed this previous support level, which could have acted as resistance, but didn't. So it came through that. And, just make a little bit. And we could do this with stock. Now, I'd love to do a covered call, but we can't afford a 9,700 position. Our max position size is $5,000, right? But we could come in and say, well, I could take this 5,000 divided by 97.41. We could buy 50 shares. We could buy 51 shares. And then, it's at 97.30. You're saying, well, like your target is like, you're talking about making $2 a share. Well, beats a poke in the eye with a sharp stick. And, if you think, well, $2 a share, on a $97 position, like I'm rounding, but that's 2%. And how long are we expecting to be in this trade? Not long. And if we look at, our goal is to make $100 a week, right? That was our goal at the beginning of the year. And we kind of upped it because, that would be 52 weeks. That'd be $5,200. We're already past that. We're up about 20% in this paper money account. Now, keep in mind, transaction fees don't come out in this account. You can get a paper money fill. These are example trades. So you don't have the same degree of hope and fear that you do with, your real money. But, so if we wanted to make, like, from now to the end of the year, another $100 a week, so that we average over the course of the year, 200 a week, like that's our weekly target. From now to the end of the year, we wanted to keep this profit and make another 100 a week, 50 shares. If we can make $2 a share, there's our $100. It's not nothing. So we're going to come to our trade tab, and then where would we put a stop? Well, we might say we're expecting this support level to hold at this 95.48. So we could put a stop 3% below that. So stop 95.48 times 0.97, 92.61. Okay, so we're going to come to our trade tab, right click, buy custom with an OCO bracket. Our stop is going to be at 92.61. 92.61. And our target is going to be at 98.50. No, 99.50. Good till canceled. Good till canceled. And then our quantity, we're going to make this 50. And we're going to hit our little paper clip. And then if I click anywhere else on this line, these lines, it will even up the quantities. When we come to confirm and send, now we're risking more to the downside. And if this were to gap down, we could lose more. Of course, if it were to gap up, we could make more. And some might say, I don't like this risk reward. I want to, make at least have a 1-to-1, or I might want to have a 2-to-1 the other way. So some might say, I wouldn't take that trade. And that's totally legit. We, however, are going to place the trade. And I like to give stocks a little more room to move so we don't get nicked out on a wick and hit a stop. And then it, comes back and hits our target. And yet we took a loss. And yet we were right on the direction of the trade. That can be a little frustrating. Okay, so there's a bullish example. We're putting that in our stocks with targets. And now we're going to come in and look at, our bearish toolbox and say, what could we do here? So here's Palantir. It's a tech stock. Tech stocks have, not been doing so hot, one could say. And this has been in kind of a rolling downtrend, right? And it came up here, hit again, didn't quite make it up that far, but now it's rolling. It hit this high. We had an entry here maybe on Thursday, and it's continuing to fall. And so you may say, well, you've missed the entry, and we've missed the first entry, but could this continue to come all the way back down here? And what we might say is, well, if we want to be conservative, let's look at this and maybe do a 1 ATR trade. And so a 1 ATR where we buy the put, we're saying, hey, if on an average day this stock moves about $6.68, I use 6.67 because that's what it was when I first looked at it this morning. The high of the day is 144.12. The low of the day is 140.05. So if I took 140.05, and if in an average day over the last 14 days, this has moved about $6.68 from top to bottom. If it moves down $6.68 from today's low, that's our target. And if you don't have this, you just come to studies, edit studies, and click on ATR. You could start. It stands for average true range. And then if you're not, you want a broader definition than what I've provided, there's a little question mark. And if you hit that question mark, it'll give you a very detailed description of how ATR is calculated. Okay, I'm not going to wait for it to finish loading, and I'm not going to add it, but you would just hit here, add selected, and you see I've added another one. I don't really need to, so we're just going to hit OK. And so to create this, we're going to come over, and I am going to go back to our scratch pad. And this is a bearish 1 ATR example. And it's Palantir, where the 1 ATR, we're going to use 6.67. And so our target is going to be today's low, that 140.05, and we're going to subtract 67. So that's going to be 150.79. And our exit on this thing is going to be 144.12, today's high, plus 667. And that's 150.79. Now, so our target, you guys are probably already on this, 133.38. Feel free to check my math. I don't know if AP 514 is here today. He's usually my math checker extraordinaire. So, and when I look at this, I think it's at 140.08. So 133, yeah, about $7 below. That makes sense. 150.09, about $10 above, and it's been falling today. So that makes sense. So to go in and put this trade in, and I looked at this ahead of time, but like if we come out here and we look at May, we've got, do we have a tight bid-ask spread? We do, 20 cents. Well, but this is $11 and we could lose the whole thing. So we can't afford to place that trade. We could afford to do this one, because we don't want to risk more than 500. We're not intending to lose all 475 to 490, but we could. We've got almost 10,000 contracts, 300 traded today. You're going, but your delta is 21. And the delta is, if it drops $1, how much does the value of this go up? 21 cents. Well, if I say, well, 21 divided by 490 is 4.3%. So that 21 cents on 490. And then if I look at this $11 one, which you say, I wish we could afford it. But if I take 44 cents and I divide that by 11.75, that's 3.7. So as a percentage return, I'm actually making, it's a bigger bang for my buck to go out of the money. Okay. So, and it's not that we always choose that, but don't think like you're the sorry sister because you have to honor your position sizing rules and buy something that's out of the money. It's not always a bad thing. So we're going to right click, we are going to buy, and we're actually buying custom with OCO, but the way we're putting this in is going to be a little different. We're going to create an opposite order, make it a market order that's good till canceled, hit our disappearing, reappearing sprocket, and then we can come in here and say, okay, if this goes at or below 133.38, we've hit our target. And if it goes above, well, things have not gone according to plan. Now for trade management, at the end of day tomorrow or before the market opens on Wednesday, we're going to go in, and if it doesn't come down and hit this 133.38, we're going to change our exit to $1 above the end of day tomorrow's close price. That's how we manage this. This is a daily management. So if you're saying, I'm going to place a couple of trades today, and then I'm going on a golf trip, I'm not even going to look at the market for the next 4 days, then you don't place this trade. Yeah, and Palantir's earnings is coming up in May. Somebody pointed that out, so thank you for doing that. But we don't intend to be in this trade longer than a week. So this is a long put, and this is a 1 ATR target. And I kind of like to put my targets, for those of you who have been following me for a while, you know that. So we're going to come up here, and I'm just going to draw a line. And then I can edit it. So I'm going to make this 133.38. And this is our 1 ATR target. And say show it on the right. And why do I do that? Well, so that if I'm looking at the stock tomorrow and it's at 133.52, I might say, you know what, close enough. Close enough. So I place the exit based on the stock price. So if it's over 100, I make it $1. If it's between 50 and 100, 50 cents. If it's under $50, it's 20 cents. Okay. So yeah, with Lulu, let's look at Lulu. So we did a trade on Lulu on Friday. And we'll just see where it ends today. But if this were the end of the day, and the high today is 148.85, then we'd move our target up to 149.85. And we'd move our exit. And where is the exit now? 149.85. Oh, these are filled. Lulu. So if we want to see where we are now, it's at 157. So we're snugging it up quite substantially. 157.10, 138.18. Did I put that on the chart? Here's our 1 ATR target here. 138. This one we put on Friday. Because, time decay is eating our lunch. We want to, be in and out of these trades fairly quickly. So someone's asking, if I want to understand real profit on a trade, how would I do that? I'm going to record that session this afternoon, and we'll be walking through the math on how you understand the real profit on a trade. So I would recommend that you look there. Now I want to look at Marriott. So Marriott, it's up modestly 3.97% year to date. I mean, it hit this high here back in February and has had quite the pullback, but it's come back to our 100-day moving average. And we have this Harami pattern, and it's bouncing. Now, this is an expensive stock. And so, could we do a short put vertical maybe if we were bullish on it, around that, 315 mark. So if we come out here and we look at the 315, 650 to 730, we only have one contract, one lousy contract. Because when you look at further out, these are $10 wide. So at the 15 mark, there just isn't much volume. Then, if we come to the 320, that's a little less comfortable, but it's also a 90-cent bid-ask spread. And if we come out to May, we don't have a lot of contracts, and our only option, our only choice is a $10 wide spread. And on a short vertical, that's just it's too much risk. So if we looked at selling a vertical at 320 and 310, we're risking $600, and we don't want to risk that much on a trade, especially because this is a bullish trade, on a stock that might be moving to the upside, but in a more bearish market condition. So we're less likely to take that extra risk. Oh, so, if we go back to that put that we just placed, and we'll wrap on this. If we go back to the put trade we just did on Palantir, and you said, okay, if the target is 133, how much could I make? So if we come to our trade tab on Palantir, and here's where our strike is, we can come here and we could say, well, here's a ballpark. So the first thing you do when you go to Theo price is you hit reset. So we're today at the 30th. Let's say we hit our target by Friday, which is going to be April 3rd. And let's say this has gone down by that $7 a share. That would hit our 133. Let's make it 750. And then you just hit enter anywhere. And it'd say, well, if we paid 475 to 490, this would be worth about 621. And I'm not changing volatility or anything. We could get out of this trade tomorrow. It could be, a week from now. So it's just a ballpark. But if you say, well, 621 divided by 475, like that would be about a 30% return. Now, if it went up by the same amount, and it hit 148, and then we come and look at this would be down to about 308. So 308 divided by 480, we'd be down about 35%. So if you want to get like just a ballpark feel on what you might make, Theo price. Okay, so and just like I thought this was the coolest thing since sliced bread when I saw it. So I just want to point out, because I ended up calling the trade desk because I couldn't find it again. So you're on the trade tab, we're on the option chain, and then you click on this, and that brings this up. And it's just a way to estimate what you might make. It's not a guarantee. Yeah. Yeah, so that's kind of a really cool tool. Trade tab, option chain, Theo price. Yeah. I thought it, like I said, I thought it was the coolest thing since sliced bread when I first saw it too. So I was going to do another trade, which we now will not do. We had done a buy right on Devon. We did very, very well on that trade, and we exited. And it's now we've got this, you'd call it an inverted hammer at support. They'd call it I think a shooting star. so if we bought 100 shares and sold a covered call now at say 54, if it pulls back, we could just buy back the call and then when it rallies, sell another one. But we don't have time to place that example trade. I will do an example trade in our paper money after the class because this is an energy stock. If we went to this 54 strike just out 2 weeks, we'd be paid $1.24. So, we could make, between $300 and $400 if it went up. Now, if it pulls back, we could look like we're losing money, but we could buy back the call. And, so we'll talk more about this one on Friday, but I'm going to go ahead and put that one in. I appreciate you joining me today. We did a lot of trade management today. In addition to that, we put on a bearish trade on Palantir, a bullish trade on Southern, and another one to come on Devon. And then we did some trade management on our iron condors, on AVGO, UNH, and on our short put vertical and long call vertical on Target. KMI, we were out of that one on Wednesday. Yeah. So guys, thank you. Have a really great rest of your day. Up next is Mr. James Boyd. Don't forget to hit like, subscribe to the channel, and follow us in the land of X and Twitter. Thanks to Kevin for being on board. There was a survey posted in the chat. If you could hit that survey, there's 2 questions. 1 means I hated it, 10 means I loved it, and then there's everything in between. And you can put comments in. So let me know what you love, what you'd like to see more of. I do promise to read each and every comment that you guys put in there. So that's it. Have a great day, guys. Bye for now.